Hello everybody and welcome to our final webinar on Syft. In this webinar we'll be covering the forecasting section, so we'll break it down into a bit of detail and then open up the webinar for questions at the end. Okay, so starting with the cash balance forecast, this is a nice and simple feature of Syft in which it brings in data from your QuickBooks account on previous bank balances and uses these as well as income and expense trends to forecast your future bank balance. We can see in the graph where it moves from actual to forecast data based on the different coloured lines, and these can be customised to cover periods of either 1 month forwards, 3 months, 6 months or a year. So you can choose to base your forecast either on the seasonality or trend. So seasonality is based on the same period from last year. So for example, the July 2020 figure in this example is based off of the cash balance at July 2019. So this will be particularly useful if you do find that your business experiences more seasonal income levels. So the other option is trend, which is a month by month trend, and Syft will therefore forecast your data based on the trend of the previous few months. You can also add custom rates for cash in and cash out. So for example, if you thought your cash in was going to increase at a rate of 5% and then your cash out was going to increase by only 3%, this can be done by adding the custom rate. So moving on to cash flow forecast, this will give you a bit of further detail on from the cash balance forecast, as it will give you a monthly breakdown of your cash in versus your cash out. This page will give you a few different options of ways to view the graph as well. So you can view it in this format, which is cash in versus cash out, or you can view cash in and cash out on their own. A particularly useful tool here might be the net cash flow view, as this will ultimately be what you look for in this graph in a cash flow forecast. So that will show you what cash is going to be left over after your income and expenses have been accounted for. So again, these graphs can use a seasonality, trend or custom forecasting rates, and can also be viewed 1 month, 3 months, 6 months or a year forward from the current period. I'll now pass you over to Jake, who's going to talk you through income versus expenses and some profit and loss.
Coming to the third tab now, we get to income versus expenditure forecast as a visual format. The first graph you can see here uses the seasonality basis, which uses the month of the previous year and makes an adjustment for the trend over the last 24 months. The second graph there shows the trend basis, which just uses the one previous month and then goes up or down using the trend over the last 24 months. This can be quite different results, as you can see with these two graphs here. If you take, for example, COVID-19, where you might not have had any sales for the last 2 months, if you use the trend basis, it will think that you're not going to make any sales for the foreseeable future. You can also, instead of using income versus expenditure, change it to just income, just expenditure, or profit and loss. The profit and loss on this next slide shows pretty much the same information, but as just a profit value, and it will include things such as employer allowances and other things that you aren't actually receiving the cash at the time. It's got a bit of an explanation down at the bottom, so if you're not sure how these figures are made up of, it should explain it there for you. If we come to the fourth tab now, we get to the profit and loss forecast using figures, and you can use the standard case forecast, which just uses your overall trend, a best case scenario, which in this case will increase all your figures, income and expenditure, by 44%, and the worst case scenario, which does the complete opposite of that, whatever you prefer to look at.
So I'm now going to talk about the forecast builder. Once you click on this tab, there'll be a little function that says create forecast. Once you click on this, a box will appear. So as you can see here, there's forecast period, and you can choose between the next 12 months or your company's financial year end. There's also the forecast interval, so you can pick to view your forecast either monthly or quarterly. Lastly, there's a populate forecast. So you can choose to view this in prior versus actuals or the percentage increase. As the prior versus actuals is very similar to the budget function that we've shown you previously, I'm going to go on to show you the percentage increase version. Once the forecast has been generated, you'll see, for this example, March, April and May. This is the prior period, and all of the periods with a little star at the top is your forecast. So if you click on the little arrow next to June, it will then pop up and ask you what percentage increase you'd like to choose. So for this example, we've already picked 5%. So for April 21, the amount shows a 5% increase from April 20. And what's quite good is after you've made the changes, the gross profit will recalculate with any changes that you've made. You can save this forecast view for next time, so when you log in, you just click Amy test and it will come straight up, or alternatively you can download it and save it personally. If you want your forecast to be really detailed, you can go through the expenses and change each individual one. So for example, if you think the director's salary is going to increase by 5%, but you think that delivery charges are actually going to decrease, you can go in individually and change that. So the main purpose of this forecast builder is to take control of your business. So by doing this, you're then able to prepare and plan for the future. You'll also be aware of potential threats and opportunities that may occur. Obviously you can manage your expenditure and you can aim to increase your sales. Lastly, this would be quite a good way to prepare for your tax liability. So if you run this accurately, you can then calculate your expected tax liability by timesing it by 19% for your corporation tax. You then have an entire year to save for this.
We hope you enjoyed this video. If you did, subscribe, leave a comment down below. You can also find us on Twitter, LinkedIn, Facebook, Instagram and quite recently, TikTok. And we'll see you next time. Stay safe!